Here we go with this week's real estate and mortgage rate update. We'll jump right into the numbers. So 30-year fixed rate mortgage, it's improving slightly, very, very slightly. 6.78 30-year fixed, national average as of today. So we're hovering in this high sixes. And when we take a look at mortgage-backed securities, again, this is the bond that is really what drives mortgage rates. So green and up is good for rates. Red and down is bad for rates. On TonyGillard.com, there's a little video on where do rates come from. You can jump on that. Just a quick video that gets into the background of how this functions. But what we're seeing right now is just a lot of volatility. In fact, the pause on tariffs is due to expire in 10 days on August 1st. So we're probably going to see some continued volatility in advance of the tariffs going into effect. I think those go, the baseline tariffs go from 10% to 30% on that day. Everyone's kind of mum on whether or not there's going to be an additional extension, probably to maintain their leverage in these negotiations. But again, we don't have a historical reference on how tariffs are going to impact the economy. And so the market's kind of like not really knowing what to do. You can see here, in fact, Friday, we lost some ground and then it kind of stabilized on this little floor of support. Today, we busted through this ceiling and tried to get through this one, and it was rejected and then rejected again. And so we're in this little tight range right here between these two, this floor of support and this ceiling of resistance here. And so we can expect, with this week being kind of a light news week, we can expect that it's probably going to remain a bit range bound here unless we hear of any news of any of the tariff negotiations moving in the right direction. Then we could see some change here that would impact the market. But one thing I did want to point out from a real estate standpoint is an update on new construction. So this trend of year over year kind of moving in the wrong direction, permits, starts, construction, and completions. This is going to impact the supply side, which we've already had, many, many challenges with. And this, frankly, is what's continuing to keep an upward pressure on housing prices, is because the supply side isn't meeting the demand that's out there, even in the face of, some of the volatility in the market, even in the face of higher mortgage rates. We're still seeing upward price pressure. And that's largely due from a supply standpoint. And so, if we continue to see year over year completions are down 24%, that's a really big deal from an economic standpoint in the supply and demand formula as to kind of what's going to drive prices. So stay tuned to this. We'll keep updating on a weekly basis as these reports come out. If you have any questions, feel free to reach out anytime. Thanks so much.